Hey guys, welcome back to this channel. This is Go Digit First Academy, and in this video, you'll be learning how to draw liquidity zones from higher time frame and scale it down to smaller time frame, as well as how to take your entries, how to take sniper entries, understanding the concept of liquidity zone, how to apply risk management to your liquidity entries, and so much more in this video. So I want you guys to watch to the end of this video. Now let's go straight into the chart. This is Euro USD. Starting from the 4 hours time frame, we want to mark out our liquidity zones, right? Liquidity zones are price level that serves as a magnet, right? These are levels at which buyers and sellers are interested to get into the market, right? Whether you're buying or you're selling, it's just a point of interest. It's as basic as that. Now, how do you draw your liquidity zones from higher time frame and how do you take your entries on lower time frame? You need to be able to train your eyes. You don't need any indicator for this. You just need to train your eyes and be able to spot these zones. Most traders will be in a profitable trade and all of a sudden they'll see that price will reverse and take out their stop loss, and at the end of the day price will continue that direction. Why? Is because of their entry. If you know how to spot these liquidity zones, you'll be able to position yourself properly in the market. A professional trader once said something that the day his trading improved was the day he started setting his entry at his stop loss level. That is where he wants to be setting his stop loss, that's where he set his entry. And he has seen price coming all the way to that zone for a very, very long time. Now, this is to tell you that he has been putting his stop loss before now at liquidity zone, because liquidity zones, once price takes a liquidity out, it serves as a fuel for price to move upward or downward, to go bullish or to go bearish. Now, we don't need all this past history data for now because this is the 4 hours time frame. We'll be focusing on the recent price action, right? Then we begin to mark our zone. This is a swing high. Then one thing that you need to understand carefully on when you're marking liquidity zone, it has to be very precise as possible. Don't give room for unnecessary spacing. It has to be very, very precise. And we can fine tune this to have a psychological price level if you want to, but this is just basic. After you've marked the high, what other swing levels can you find on the chart? Look at this particular swing level. Let me use this two. Look at this level right here. Price took out liquidity that was resting right here, and afterwards you see price pushed up to the upside, right? Price took out liquidity right here and pushed up to the upside. Now you can see another liquidity being spotted here. Let me use the same tool. If you extend, can you see price took out liquidity? I see price is moving forward. So this liquidity has been taken out. So we can still mark this as a valid area of interest because that's the most recent liquidity sweep. And let's continue. This is another liquidity high, right? Like I said, you have to make it as precise as possible on your candle, right? It has to be very, very precise. No room for errors. So you can see this is a protected high right here. So if you wish, you can as well mark it this way to become a zone for you, because that week has is called a void, right? That rejection there, you can, this is a protected high. Price has not mitigated this high for a very long time. Let's say this is the low as well, where price has long from, can you see right here. These are just the basic step-by-step process. Now you've marked the strong high and the strong low. Now this is the in-between trend. You can see liquidity resting right here. You can mark the zone as well. This is Euro USD, guys. You can mark the zone right here. So like I said, make it as precise as possible. no room for errors, right? So now we've marked all of this zone right here because this is the 4 hours time frame. Price has already taken out liquidity right here, leaving some kind of liquidity block right here. So it is a liquidity block which can also serve as an order block if you want to call it that way. Can have it this way as an order block. So we expect price to bounce here, right here, and move all the way to the upside, right? Just like that. So let's scale down to smaller time frame and see what we have. Now let's wait for it to load up. It's going to take a couple of minutes, seconds. Yeah. Now there's something guys you need to understand, right? Anytime price takes out liquidity, please let I'll explain peradventure when the chart loads up. Whenever you see price taking out liquidity, right, and reject below it or above it, you have to wait for a confirmation entry because we believe that liquidity acts like a fuel, right, that moves the market in a favorable condition for the big players, right? So whenever you see big players come into the market, like the institutional traders, we expect big moves happening, right? We expect big moves to happen when liquidity has been taken. So, and what is our signal for the big moves? We expect an FEG, right? A fair value gap after liquidity has been taken. That is our confirmations, right? Without that, we are not taking any trade. We have to wait for a confirmation. So right here, we have to just fine tune. This is the 1 hour time frame. We'll fine tune our lines to make sure that they are super accurate. Now look at this. Price almost got to that liquidity zone, but still gave us a confirmation that the big players are in the market. So the first FEG after a rejection of a liquidity area is valid, right? Most people don't believe in the fair value gaps, but I tell you, this is my major confirmation, my conference. So this is my gap right here. I look out for the body of the candle, not just the wicks. So this is a fair value gap for me. This is good enough and giving us a signal that the big players are in the market. So what are you gonna do? You can wait for price to get to this fair value gap, then you take your sell, or you take your sell after price retraced close to the FEG. Right? So it is as basic as that. So let's play price forward and see what we have here. So remember, this is the 1 hour time frame. All of these are so much data when you start scaling down to smaller time frame. So what do we have here? We have all of this playing out. You can use our trend line to help you mark out those highs so you can get it very clear. So can you see now guys? That's what I'm saying. If you want to extend, you can extend, but I don't think it's necessary. But here is it guys. So can you see guys? Price started from here, respected this trend line, right? Pushed price downwards, came close, pushed downwards, and also came all the way here. Now look at this beautiful thing. I told you guys, after price takes out liquidity, now liquidity is not just about having this ray alone. Your trend line also holds liquidity right here. So anytime you see price weaken out the trend line and returning back into that trend line, it means that's taking out liquidity that is gathering here, right? You can see this is 1 hour time frame. Price has been holding up below this trend line, right? So whenever you see price weaken it out and returning back into that zone, especially from the higher time frame, you expect price to keep on dipping down. So we expect price to come all the way to take out liquidity right here. So this is our zone if you want to have it as a zone, and if you also want to have it back as a liquidity area, you just have it this way. Remember, this is a liquidity block. A liquidity block for me, I define it as an area where price has already taken out the liquidity at the left hand side and before pushing up to the upside. So we expect price after price taking out liquidity at the top, We expect price to what? Deep down to this liquidity here and do whatever it wants to do. So this is for the 1 hour time frame. You can as well mark out your liquidity areas. You can see this is a protected high. You have to adjust or fine tune. Right, you have that. Let's pick the most recent price action, which is this. Right, so we have our week high and our week low right there. So and you see it perfectly aligns with the trend line that's playing out right here. So what we'll do is once we have done with 4 hours, we'll fine tune with 1 hour. Now we'll go to 15 minutes time frame. We'll scale down to 15-minute time frame. I'm going to show you potential entry point, what you should look out for if you want to take an entry using all of these concepts. So you see right here, you fine tune your trend line to be very precise. You have that ready. You've seen on the 5 minute time frame, or this is 15-minute time frame, sorry. So we expect price to come and take out this liquidity. What was the first liquidity price took out? The high, right? Price already take out the high. Where will be the next target for price is to take out the low as well, right? This is the ideal way we're expecting price to take out liquidity. Now we expect price to give us a kind of rejection or price action. Can you see even right here we got a liquidity sweep. You have to be able to train your eyes, guys, to see these areas. Can you see, guys? This was a liquidity sweep. Price swept this liquidity that was resting here. Price swept out the liquidity, and afterwards, you see price moving forward. Right. So this now, for example, if we are to take a trade, if we are to take a trade right here, let's say, and no, guys, I told you whenever you have liquidity sweep, we want to confirm with an FEG, right? Which is this candle right here. Can you see that breakaway, that displacement that happened to the upside? That is a confirmation. Now, let's say you want to go long. This is the exact way you're going to place your stop loss below this liquidity block right here. Liquidity block is just a zone below a liquidity area that has been taken. Right? You get so that's where you want to put your stop loss. You can target a 1 to 1 or 1 to 5 or 1 to 2. Look at this 1 to 2, beautiful 1 to 2 sword ratio, and you see you've gotten a very clean trade right here. Can you see, guys? Very clean trade. So this is the about taking opportunities. When you train your eyes, guys, when you train your eyes, you'll be able to see all of these levels. Now you can see all of this. This is a point, this is a level, this is a level, this is another level right here. But we don't know the level price is going to what respect, right? We don't really know. Look at this. Let me use this straight line. Look at what price did. Price was gathering liquidity right here, right? Price was also what gathering liquidity on this trend line, right? Can you see that price was taking out liquidity and this liquidity was broken with an FEG, right? Look at this beautiful FEG giving us a solid confirmation for this sell signal, for this sell right here. So if you want to mark out this zone, like I said, all you need is the touch line on the trend line, right? If you want to mark out multiple, but it is not ideal enough. So this is possible entry one. This is very close, but you can see, guys, this is another entry, and look at another one here. So but we don't need all of that, right? We don't need all of this because we don't really know where price is going to respect. We already know that price has taken out liquidity from this zone right here. Can you see price took out liquidity already from this zone and pushed price upward, right? But this is a major liquidity zone that price has taken, right? So we expect price to come all the way here Let me bold it, let me take this so that you guys can know there is a stronger point of interest, right? So we are not going to take any trade because anything you are trading right here is just scalping, is scalping, right? You don't want to take those kind of trades. Now, how do you take your trades? Let me give you a practical example right now. So let's say price keeps dipping down and forms an FAG, forms an FAG. Let me finish writing this out. Sorry about that, guys. Let me delete this. Let me first make it tiny and yeah. So let's do this again. Let's say price dips down, right? Breaks that liquidity level, comes back to fill in that FAG, and price will continue rallying down. So this is what I mean by that. I'm expecting price to dip down, right? Giving us a valid FAG, that is a fair value gap. A fair value gap must break this zone right here. A fair value gap must break this zone. So once we have a breakout of this zone with a fair value gap, we expect price to retest into that fair value gap and dip down to this last zone. This is possibility number one. Possibility number two is price can as well take out. If you want to take screenshot of this, kindly do that now. So I'm taking it out. So price can as well do this, and price can as well do this. Oh, that's okay. Take out liquidity right here and bounces off, right? Once it bounces off, comes back to fill up the FVG that was formed there and all the way back to the stop, right? So we expect an FVG after price has taken out liquidity. Let me zoom out a bit. So I'm expecting a fair value gap after price has taken out liquidity right here. So I'm expecting the fair value gap to be around somewhere here and price retesting that fair value gap and push all the way up. Right, remember this is 15-minute time frame. You still want to take your entry on the 5-minute time frame. So you can take your entry here on the 5 minute on the 15-minute time frame, or you take your entry at the 5-minute time frame. Anyone that you choose, it is still good enough. So this is just taking trades using liquidity level, and you see you'll be able to target higher risk to reward ratios and lesser risk, right? Lesser risk and higher wins. That is the benefit of trading top down analysis using liquidity concepts, right? So remember, anytime you see price breaking through a liquidity line, we expect it to break with an FEG. If it's not breaking with an FEG, then we are no longer interested in that trade, right? We are not interested in taking that trade. Because see, price was building up liquidity at the top right here. Let me use this trend line. Price was building liquidity. Can you see? So see, almost perfectly aligning with what we already drew, right? So we expect price to dip down, take out liquidity right here, gives us a fair value gap right here, comes back to this trend line, respect this trend line liquidity, it's going to respect this trend line liquidity and pull back into the FEG before moving forward to the top. That is scenario one. I already explained scenario two. Scenario two is going to be something like this. We're going to expect price to keep dipping down, right, and break through this zone, comes back into the FEG, and in fact, it might even take out liquidity again one more time and dip down to the downside, right? Just dip down to the downside. This is another possibility too. Like I said, we must have FEG confirmation here around the zone. We expect a fair value gap to form. So we take our sell from here and we take our buy from here. So either way price wants to play out, we are good to go. So let me clone this You can easily convert this to a channel, right? It does not need to be perfect, but it is what it is, guys. Let me just take it out so you can see this is what we're expecting price to do. Um, if you're not on the WhatsApp group, you're not on the WhatsApp channel, check the description below to join our WhatsApp group where we send live trades, live signals. And for the past 3 weeks, we've been taking trades based on liquidity concept, back to back wins. There was no SL that was hit, guys. So you need to join our community. It is very, very important, guys. Look at this trend line, how powerful the trend line is. If you can draw your trend line perfectly, you don't have any issues. Look at this touch point, and another touch point right here. And what happened in the future? Price broke out that touch point with one an FEG. Right? Always respect FEG, guys. This is a very powerful concept, right? This is the footprint of big players, right, guys? So this is it. Price broke out that trend line with an FEG. You can see if you want to enter your trade immediately after that, you can. And look at the retest of that FEG level. You could see price rejected off that zone, right? Price rejected off that zone. So that is just the concept. You always want to wait for an FEG to form for a perfect entry position, right? This is how it works, and this is liquidity concept. For your entries, like I said, we just want to minimize our risk and have a very good profit ratio. Look at this. Your stop loss will just be below that liquidity zone, and you target all the way to the top, right? If you want to take a screenshot of this, you can take it so that you can use to monitor today's trade. So this is that, right? So and for the sell probability, we want to take our trades somewhere around here. Our stop loss just above that zone. We target all the way to the next liquidity zone. So this is just the liquidity concept, guys. It is very, very simple. If you want to take a screenshot of this, you can take a screenshot so you can practice it on your own when you are less busy. Look at this, all beautiful. You don't need to cluster your chart with so much lines, right? It doesn't make you a professional, right? As a professional trader, your chart has to be very clean and simple. And before I leave, so liquidity concepts can also be used for support and resistance, guys. It can be used for support and resistance. So you see where price is rejecting, where price is going to hold as support or hold as resistance, guys. This is as simple as this. Can never be simpler than this. Right? Try and master, train your eyes, look out for liquidity areas, and you're good to go. You're good to go, guys. So you could see liquidity was also resting right here. Price came to take out liquidity right here, right? And price started dipping all the way down, right? So could see price gave us an FEG after that liquidity has been taken. Look at this. Price took out this liquidity right here and gave us what? An FEG right here. Look at this. Always wait for an FEG for confirmation, guys. This is very, very important. Look at this. An FEG formed right after price took out liquidity. Right? So this is a very powerful strategy. Take your entries. Look at this. How do you set your stop loss? Look at the next liquidity area to set your stop loss, or you can just decide to follow your own account fix management, right? You can follow your account fix management. You can put your stop loss right here. You can put your stop loss and the trend line as well. But you have a strong confidence because FEG is here giving us a footprint that the big players are ready to sell. So that is it, guys. Where will you pay your take profit? The next liquidity area, or you're going to use this other liquidity resting points, which are these areas, or this area right here as your take profit target. And you can see as your take profit target, look at the risk to reward ratio. This is massive, very, very, very massive, guys. So this is exactly how we trade in our community, and I don't want you guys to miss out. If you are not in our trading community yet, kindly do so and join on the platform. And I believe I'll see you guys in the next video. See you guys in the next video, guys. Make sure you subscribe, like, please, and please try and like our videos, subscribe to our channel so that you don't miss any of our upcoming videos next time. So this is Liquidity Concept. Once again, I'll see you guys in the next video.